Welcome to Alliance U, your source for accounting and financial information. Make sure you subscribe to our channel to see more content as it arrives. Today we're going to talk about audits. Financial audits are a detailed review of a company's finances, examining accounting records, internal control policies, cash balances, and other sensitive financial areas. Publicly traded corporations are subject to audits on a regular basis, and even privately owned small business can be subject to audits by the IRS and nonprofits by funders or government authorities. Audits can be complicated, so here's a simple breakdown of the four main phases. In the planning phase, the auditor's objective is to gain an understanding of the entity and see what information is necessary to conduct the audit, collects documents from prior year audits, and gathers preliminary statements from the organization or individual being audited. During the planning phase, the auditor also plans the scope of the audit, and in some non-sensitive cases, a letter is sent to the organization's audit or finance committee to make them aware of the upcoming audit. In this phase, the auditor evaluates the organization's operations and considers its internal controls, processes, and procedures. If the organization has practices that inhibit the auditor's ability to acquire the information necessary for the audit, they might adjust their plan to reconcile their assumptions with the reality of how the organization operates. This could, however, render the internal controls unreliable, which would require alternative testing methods during the fieldwork phase. During the fieldwork phase, the auditor may interview employees in different departments of the organization to understand its general practices. This is usually performed on-site, along with some internal control testing, and helps the auditor get an idea of whether or not the organization's policies are being followed. The auditor should be able to clearly identify non-compliance and controls that are ineffective or less effective than they should be. During the wrap-up phase, the work done and information gathered during the first three phases are aggregated and formatted into the final audit report. In addition to identifying areas in need of attention, this phase will also include recommendations for the organization to improve its adherence to its internal controls and operation overall. These results and recommendations are usually discussed in an exit conference held between the auditor and upper-level management at the conclusion of the audit, sometimes followed by a presentation to the board. We hope you enjoyed this video. If so, please like and share. Have any questions? Leave a comment and we'll be sure to get back to you. Thanks for watching.